that is looking for an apartment, just let them know to go to apartments.com. It's really the best source for the most up-to-date, accurate information versus some of these other companies that start with a Z. And, some of these other ones where they focus on more buying and selling homes. But we do have a competitor that will compete against that, which is actually homes.com. And so we've already, homes.coms are actually getting more traffic than Realtor and then Redfin right now combined. So, and so we're expecting in the next year or two to actually be up there neck and neck with Zillow. So, but yeah, thanks guys.
Awesome. Thank you, Mitch. Okay, we'll get started here. Well, first thing is, we got to introduce yourself a little bit and feel free to talk about the specialty. We can start here.
Well, thanks for being here, everybody. I've been here before and I'm very happy to be back. So thank you, Brian and Lucy. And I'm Sam Rodgers. I'm a native of Northwest Arkansas. Born and raised here, went to the University of Arkansas as well in '98. I don't think I was in the computer engineering classes, but you might have seen me at the Walton College. I've been banking in Northwest Arkansas for 17 years and have a pretty interesting trajectory from a small community bank with about $300 million in assets to where I am now, Regions Bank, which is, at the beginning of time, about the 12th biggest bank in the country. We're a super regional bank in 17 states with 20,000 partners. And my role there is a relationship manager, which is a little bit unique. This is a very heavily banked area. I know because I've grown up here and cut my teeth here. And what I really do is identify opportunities and bring in specialists. So you would call me a generalist. We call ourselves quarterbacks because we've got blockers, we've got passers. I hand the ball off to Missy and let her run it a touchdown. And that could be in any industry. The one thing I think that might set me apart here is that the Regions Bank holds all the agency licenses for 30K in the hub. So I can shop through those different product lines for your commercial investment real estate. But what I really do is build relationships and identify opportunities to deepen and grow your business because I have many partner lines. That's a little bit about me. Born and raised here, happy to build my brand with Regions Bank, a great place with a good culture. Based out of Birmingham, and we have a lot of products to offer. That's where I'm really there because I outgrew some of the banks that I was with previously and wanted to know why stuff was running off my balance sheet. Well, I went and found out and did the due diligence and knowledge to put those products in my products. Happy to be here. Thanks, Brian. Thanks.
Tim Doyle. I'm with the First Community Bank. I have been in Northwest Arkansas since 2007. Originally from St. Louis area. So I've been in commercial real estate my entire career post-college. Was in the commercial title industry for a long time, 13 years here before moving into banking about 4 years ago. So I started with First Community Bank a year ago, a little over a year ago, almost a year and a half ago. Very unique opportunity to help start the first Community Bank in Northwest Arkansas. Bank based in Batesville, started in 1997 from the ground, literally the ground floor up, 13 individuals there, very unique story. The bank has really grown organically throughout the state in Southwest Missouri and started about a year and a half ago with I've got my team over here, Austin, Natalie, and Keon. And really exciting time. We're located in Rodgers in the Doyle area. We've recently acquired some property in Fayetteville, so we'll have our second location open probably about mid-year. So really excited to be here, really excited to hear what some of my colleagues have to say about the market and all the nuances and interesting parts that we're dealing with today and try to help everybody out. Obviously, we have a great market. I think we are a little bit in a bubble compared to some other markets, which is, it's a healthy market, it's a good thing. But I was excited to hear what everybody else has to say. So thanks for having me.
All right. Well, thank you for having me here today. I'm just going to put a caveat. My day started at 4 a.m. this morning as I headed down to Little Rock to talk to the State Education Committee, Senate House Committee to present a project the Bentonville School District's working on for affordable housing. And so the early starts, if I seem slow, it's just because of that, not because I'm a foreign banker. I moved to Bentonville in '97. When I was in high school, my dad was a vendor. I started with Bentonville as a teller. in '99 went to school. I'm a graduate from Harding University, D2 national champions in football this year. That's right. I never thought I would say that, so I've said it several times now, right? Best football team in Arkansas right now. And so then I came back after being an executive recruiter to be an entrepreneur in Northwest Arkansas, failed at that, and went to banking to figure out how to get a loan to buy the real estate I wanted to buy. I haven't left since. I'm a loan manager for Arvest Benton County. I've got a team of 11 commercial bankers. We originated about $530 million in transactions last year, about 550 this year. We're doing 80% real estate, and that can be investment, single family homes, all the way to retail anchored Whole Foods buildings, large signs on there. So if you haven't driven past the Whole Foods and seen the Arvest sign, I'm not breaking any client confidentiality. And that's got a 400 unit apartment complex tied to it. We get the opportunity to look at a lot of transactions. We've been around since 1961. Arvest, Benton County, Arvest Bank of Bentonville is the creator of our culture. I got that from David Short, our former president. And it started there, and now we operate a 4-state primary operating area of Arkansas, Oklahoma, Kansas, and Missouri. We do follow customers out. I'm looking at a project in Houston now, did several in Texas. We have a student housing developer that we followed throughout Texas, Louisiana, and up and even to Lincoln, Nebraska. But like I said, banking is boring, so we try to add value through industry knowledge, market knowledge, having the opportunity to look at a lot of pro formas and construction budgets, gives us insight into what's coming to the market, what's going to be delivered in the next 18, 24, 36 months. We're growing. We added 3 to our team this year. When you have this many deals happening in this region, we need more bankers. Fortunately, there wasn't a lot of trained bankers in 2008 to 2017. So we did just add a medical office advisor for Marcus Milchamp out of Dallas. He joined us. He's a graduate from SMU. He's calling on all the market in North Texas for medical office. So we're really excited to have Garrett Wolf join us. Got a couple real estate, mortgage. That market's a little slow. 18,000 transactions a lot. I think that's down. Mike, right? What was it 2 years ago?
Down 5.5%.
Yeah, okay, so we did have a mortgage lender join us, and Cole Barrow out of so far, and so he's doing a great job too. So plenty of team to meet your needs, but I'm glad to be here tonight. I won't make any predictions on the economy. You'll hear a lot of hedged bets about, I believe, maybe those will come out of my mouth tonight, but I'll give you whatever we have from a market data standpoint. So thanks for having me.
I'm Mark Cloud. I work for First National Bank of NWA. We're a division of First National Bank of Fort Smith. Been around since 1872, the oldest national bank in Arkansas. One thing I think is great about that, if you're around that long, you must do things right? You don't stick around that long if you're not doing it the right way. I spent about 20 years in the design and construction world as a consultant. So that's my knowledge background. I bring that to the table. I just been banking for 5 years. To be honest with you, it's not that hard. If you care about the people you work with, then you can bring your product to the market. And I love infill. That's my favorite project type to deal with because I think it fits a lot of need that we have in Northwest Arkansas. Like to do as much of that as possible. Also like one-off stuff, things that a lot of people on this road wouldn't necessarily look at because I think it's crazy or out of the box. I kind of have a different perspective. So if it makes sense, and I know there's a market for it, I don't see why we couldn't do it. So anyway, glad to be here. Appreciate it. I won't bore you with any more details about my bank that you don't really care about.
Thank you. Well, my name is Matt Cramblett. I'm Vice President of Commercial Lending over at Citizens Bank. Citizens Bank is also based in Batesville. I don't know if the rivalry is probably not as bad here as it is in Batesville. But it's pretty rough over there. We're about a $1.4 billion bank. We've been around since I believe the 60s. Just in Arkansas, we do have some agricultural lenders outside of the state. Me personally, I've been in banking since 2012. I grew up in Searcy, Arkansas, so naturally I started as a teller at First Security Bank, and I was a credit analyst over there as well. My wife got a job at UMS, so that took us down to Little Rock, and so I was in Maumelle there for a little while. I was at Reliance Bank after First Security Bank. They gave me an opportunity to be a lender over there, so I went over there. I was over there for about 5 years. Grew a pretty good loan portfolio. Was kind of at a crossroads with my family and the community though, and I got a great opportunity from Citizens Bank to move up here to Northwest Arkansas, which is just a fantastic place to grow families. So I graduated from Harding University in 2012 with a finance degree. And yeah, I'm just appreciative to be here. This is my first roundtable discussion, so I'm looking forward to hear what everybody has to say.
Cool, awesome. Well, Ron, you want to come up with the first question? Wanna make their face a little bit bigger on the screen?
Yeah.
So the Missy has some questions here prepared too, and if you guys have any feedback too, this can be as open as we want it to be, so. It's starting on the national, I guess we'll start in at the national level and then kind of work our way to Northwest Arkansas. What are the major signals you are watching in the US commercial real estate market? And how they impact the directions of the overall market, for example, interest rate, debt, elections, et cetera.
Yeah, not everyone has to answer, and we can work from the middle.
Yeah, she said,
I have no problem talking, so just point at me if you want me to talk. So real quick, yeah, the election will have some impact, I think. I mean, you can't say an election after the 2020 election will have an impact in the market to some degree. We saw a lot of our larger clients slow down, want to see what would happen at the election to kind of understand what the playing field was going to be, what the rules were going to be. So you'll probably see things slow down. Interest rates, they came out with a pretty strong statement at the end of last year. It'll be interesting to see what March brings us. I think that was a statement in preparation to lower rates later in the year, not because of an election, right? We told you at the end of last year we were going to do it. We didn't do it in March, so we did it later. We didn't do it because of the election, because you don't want to politicize that. We are watching the office market. I say that with the caveat, we do believe that Northwest Arkansas office market is strong. Good tenants, it's not overbuilt. We worked on a $25+ million transaction acquisition last year, and there wasn't any problem in the underwriting. We're able to get that close pretty quick. We're looking at more office up here, both ground up and existing. Outside of Northwest Arkansas, in our markets like Kansas City, Oklahoma City, Tulsa, we're watching it pretty strong. Dallas market, we're seeing some weakening there. We just watch it because it trickles up. I don't think, my opinion, it's going to have a huge impact in Northwest Arkansas, but I think it could have an impact on the economy for a period of time. One example is AT&T building in downtown St. Louis. I think it started off on auction at $2.5 million. It's a 1.4 million square foot building in downtown St. Louis for $2.5 million. If you run the TI number on that, though, you need like $70 million in TI. So yeah, of course it's going to start $2.5 million, but if that starts to trickle into all the big markets, you will see an effect because we have a lot of national tenants that are officing here that'll have to adjust what they're doing with all their space throughout the country. The multifamily market's strong. That's due to the lack of housing here and the continued growth in Northwest Arkansas from a population standpoint. The last I heard from Duke McClarty, 39 people a day. That varies from who you talk to. So somewhere in the 30s. As long as we continue that, I think multifamily is going to be in high demand because there's not enough residential rooftops being built. We're seeing some of our longtime builders slow down a little bit because of interest rate. There's a little concern there, which makes sense. They're reevaluating the type of product they're delivering, smaller footprint, so that it fits on a certain price point. I've done a lot of talking. Yeah, of course, we can do.
You hit it.
Data points, anyone else want to add anything about that or anything?
Well, you mentioned office. I think the oddest thing about office, I don't know that any of us know what office looks like in 2024, 25, 26, right? We don't know. We're not sure where the flex office space is going to land. I think Walmart doesn't even know, right? I mean, they've iterated their campus, I don't know, 7, 8 times before it actually moved dirt. So I think to me, that's the most volatile part of our office here. It's been my experience. We've always underbuilt office in Northwest Arkansas, which is why it's always strong. It seems like we always need more than what we have. But I think that not understanding exactly what office space looks like in the future makes that an interesting play that none of us really, I don't think, know what that looks like. But the way I would look at it is if you can't build, just generic office space anymore and expect to be full. So that's just one caveat I would take with office.
are you guys underwriting like office vacant? I guess multifamily vacancy, you can kind of count for 5 to 10%. Is there like a rule of thumb for commercial office space?
For us, the office space is so strong in Northwest Arkansas. You're not seeing a lot of projects with a lot of vacancy. You got the segments of market, right? So everybody talks A, B, C, Northwest Arkansas. It's just a different market, right? You're not going to say the stuff off of 28th Street that has full of vendors, low roofs, center brick wall is C, right? But in other markets, that would be C. It's a B product, but it's been leased up 90+% for as long as we've had financed or I've been in Northwest Arkansas. So that's a strong market. So if that's going to flip and the rents support whatever the purchase price and equity is, I think you're going to see, and I may be one of the few to talk about this or believe this, deal, and I've told a couple people today, deals are not 80-20 anymore in the commercial real estate market because costs are too high and interest rates are too high right now. So deals to be done in 2024 are going to require more equity. But from an office underwriting standpoint, we're not putting any inflated vacancy rates. We're looking at historics, looking at the market as a whole. And so, I mean, 5%, I mean, we've got clients that are at 98%. They have been for 10 years.
Appraisals too, my last 3 appraisals through Arvest came in low. So.
What type of product is that? Yeah, land doesn't surprise me. That's, that land is one of the first assets to drop value as interest rates go up. Yeah, so I don't know what the comps were on that. That's where it was located, but yeah, it's not a surprise to your land. We can work through that. We did a lot of financing in 2012 for downtown Bentonville. It was resurging and residential homes were being purchased and they weren't appraising out either. We have a lot of information on the comps there.
Is there anything we can do to, this is right on I-49?
Yeah, provide the comps up front that you think are applicable comps. That's what I'm asking for. That's what we ask for is say if you've got like product that you've been using in your pro forma to get yourself prepared to buy this, just share those comps with us.
Is there appraisal in the room? Any appraisers?
Let me know when you do that panel. I'll show up and sit in the front.
Since there's no appraiser, you gotta do the homework for them.
Yep.
If you wanna get appraisers, you gotta do the homework for them. Sorry, I mean, especially in this market, right? Because they're gonna be very conservative. They don't want to be out there, typical, right? So if you won't, right, yeah, and it probably went way too far, right?
Totally.
So they're bringing it back. So yeah, you just gotta do a lot of legwork on your own and bring that to the table. Like Kelly said, do the homework for them.
But when we're talking offices, with a Walmart building, that corner here, what happens to all the vacant buildings?
You know, you asked.
That's $1 million question. Everybody asks me that question. I don't know why. It's under contract, 68 acres, it's actually 2 blocks behind my house, so I am very invested in what happens here. I wanted a soccer stadium to be there, but that's not where the announcement was made, so I was disappointed about that. 68 acres, you can do something pretty special with. I think there's no announcement. I have no inside to it. I don't even know if there's been review preliminary plans just yet, but you can imagine on 68 acres, you can do whatever you want. I mean, retail, innovation centers, you could have mixed partnerships with the U of A, the collaborative, the school district, entrepreneurs. You'll have multifamily, I'm sure. A lot of people keep telling me to tell people they want a convention center of some sort there, which makes some level of sense. I don't know if you do this traditional John Q. Hammond. It's a lot of space, a lot of square footage. You probably do something that entertained a larger group of people. I don't know what they're going to do with the buildings.
Well, I was wondering if anyone had any size.
Not yet.
Kelly didn't know too.
Cool. What about interest rates? Seems like lenders are predicting this year we'll have some reductions in interest rate, whether it goes thoughts.
I'll jump in there because Kelly's been really carrying the load here. I'd say from the top down that what you're anticipating is what we're anticipating. Nobody has a crystal ball, and I wouldn't put all my eggs in one basket, but 3, probably quarter bit drops over next year would be anticipated, and we're factoring that in to both sides of the balance sheet, particularly deposit runoff, which can be really exciting for a lot of people in the room. A lot of money's been sitting on the sidelines, so to speak, or on the fence, looking for a push. I think there'll be a lot of opportunity. That's what we're forecasting. Nobody really knows, but I'd say when you're forecasting, you're making an assumption. You don't really assume very far off the norm more often. So that's how we're allocating our resources. I'm looking forward to this year, actually. I think it's going to be really exciting, particularly you're in a market that's growing. But one thing one thing I would say is we didn't really talk about industrial or retail. I think there's obviously everybody here probably has a good idea of vacancy rates there. I was loving the fact that you said you're interested in infill. I think retail is a really underserviced opportunity in this market with a lot of compression for TI expenses in particular. One thing I'd mention is that there's been a lot of alternative sources of financing those smaller dollar opportunities, and particularly I've leaned into SBA more than ever in my career. There's 2 factors to that. One is the rate environment, the other is the lender seeking to receive SBA. So we'll see more creative things, and I would also echo the 80/20 is a thing of the past. It probably will be for the next 1.5 to 2 years.
I'll be kind of the negative Nancy on interest rates. I still think that rates have a lot of tailwind behind them. Obviously, it's data dependent. It seems like week to week, we're getting some new data. Inflation's still not at 2% where they wanted at 2%. You got jobs are robust, wage growth is still good, unemployment is still super low. There's not really a reason out there for them to lower rates. So when they came out with the dot plot and said we're going to lower 3 times, it's kind of surprising to me that they would even say that. It also makes me think they are seeing something that I'm not seeing or anybody else is seeing. But as far as if you just follow the data, I don't see a reason why they would even decrease in March unless something substantial happens and there's some kind of industry breakdown. Some sort. So, plan for the worst, hope for the best.
I probably lean more towards Matt's comments on rates. Well, what you guys need to prepare for in rates is that all these banks have been chasing for deposits. So the Fed's going to lower rates, 75 bips, 50 bips, nothing. The banks have your CDs at the highest. I've never owned a CD until this year. There's never been a reason to put my money into a CD. And then I'm like, wow, 5.25%. Well, I'll park some money, 5.25%. Well, the banks have a cost of capital. I mean, that's their cost to lend. So you may see the Fed drop the rates, but if a bank has gone out and tried to acquire a bunch of deposits with high interest rates, you're not going to see rates go down. So back to the 18 months, or we're saying 18 months before you see rates come down. That's yeah, you'll hear about it, but you won't feel it or see it for a while.
I'd say 2 things to kind of piggyback on that. I don't mean to drag this out, but hyper local, I'm seeing rates in the 7+ on CDs fixed for 10 months. I would encourage all of you to go put your money in that bank so they may go away.
Wow. Gloves are off.
I'll be doing that, but I'd also say, you know what, I ended on a joke. So.
No one know all. That's right.
There's also a lag, I think is what I wanted to add. And it's not just in appraisals, it's in the information that we're receiving. When you say something like they're seeing something we don't see, well, they're the only ones seeing it, right? There's a lag of information. None of us have a crystal ball. I wouldn't be surprised if we don't get what we're signaled, but I'm still anticipating the reaction, mostly because money has been tied up. So we'll see what happens.
What asset classes did you guys, I think Mike was talking about residential down 5% in 2023. This next question's about what did you see have the most activity in commercial real estate in 2023? And then what are you thinking for 2024? Are you thinking same activity, 2023 uptick? I know last year we wanted to do 12 new deals and we did 3 new deals. So I know activity was definitely down across the board. So interested to hear what your guys' thoughts are on, if there was a certain sector that had more activity, or what you guys thinking for 2024 too.
Well, nationwide, I'd say I've seen the commercial mortgage-backed securities market real slow, which is not a surprise to anybody. Being expensive and a lot of transition from a C to a B and C to, I do recognize your comment, a C here, an office in particular is not anywhere close to. Or an A here is something close to me, particularly in that retail and anything that's been bundles and mortgage-backed security.
We did probably 1,000 doors, multi-family, I think, buying some ground up, new construction. We saw some banks have some liquidity issues, so we were able to step in on a couple big projects and take out a construction loan, which you don't see too often, but they were doing an additional phase. So project up here in Bentonville, we stepped in for a banker and then a bank, and then a project down in Fayetteville, we did the same thing. The multifamily is still strong. Again, that's a result of not enough rooftops to support the people moving here. Office, I told you we did an office deal. We did the Whole Foods. That took a lot of time and a lot of work. Had some appraisal issues on the Whole Foods, believe it or not, but we were able to work through that. Eventually, we just came all and agreed that this appraiser was crazy, but we got it up. We got it up where it started. We got it up, but we couldn't get it. It's our go around. Yeah. Everybody is. That's a big amenity for a lot of our workforce. I think you're still going to see multifamily. Somebody's got to figure out the rooftop. So it's single family home. I think everybody's still gun shy from the mid 2000s, 2006 and 2007, where we were overdeveloping lots. I think we did 1,200 plus lots in Pea Ridge over the last 2 years. So Pea Ridge is seeing a lot of growth. But we're not even seeing the western side of Benton County, which would have been the other big growth from a lot development standpoint. I think some of the builders are concerned when you see a DR Horton, a national builder that should get some economies of scale. Worried about price point. The big thing they're worried about is DR Horton come in and say, hey, you're going to pay me X amount, and then I'll finance you at 5.99, which is a really good mortgage rate right now. And they have their own mortgage company. And so the builders aren't wanting to compete against that. And that is a concern, because we don't have rooftops, and we're gonna, the doors aren't coming up, multifamily fast enough, so. And then the supply demand, I mean, we're still seeing people want a pro forma. I was telling Jake Newell, every pro forma I see has the Howard in it.
It's funny how that works.
Right?
There's a lot.
And then everybody's cap rate when they're gonna sell talks about the depot and all the stuff we sold in the southwest side of Bentonville. I'm like, you're the man. Every one of these multifamily developers points to Jake Newell. We're gonna do what Jake did. So we have to parse through that data. We're getting, I mean, fairly granular and looking at, you know, how far are you from key amenities, right? The Howard's is downtown. I don't know if you're gonna get anytime soon, anything closer to that. You have a great restaurant there. That's the walkable community you want. And so we're looking at that and trying to underwrite that and seeing what you can get for premium. We did a lot of the research on the Whole Foods, and that any multifamily attached to the Whole Foods demand for premium nationwide, and so there's data to support that. So it's just really getting in and getting granular on that. I think we're looking at anything and everything. And I tell the team it's a yes until it's a no. So just keep telling them yes, and then eventually they're going to tell you no, because 50% LTV, we're probably gonna be able to do that deal. So you got the equity put in. Let's talk.
It seems like you guys are pretty still like going after development deals. It seemed like a lot of banks that I was talking to last year, because we were actually working on a project with them. A lot of banks last year seemed kind of holding back on multifamily development. Are you thinking that, sounds like based on what you said, there's a lot more room for multifamily
I
development?
think there should be a lot of demand, and so that'll pull people in to look at the market to build. I've looked at a lot of pro formas, and where they're not working is you're at a peak of interest rates that may or may not come down, and costs haven't come down. I mean, back to your mass inflation comment. I mean, I'm talking to large contractors that are still seeing costs that are high for materials. Labor for sure is going to stay high in Northwest Arkansas for a while. I don't think you're going to be able to see that come down just because you have one of the largest projects in the country going on. It's probably going to convert to another project of 68 acres at some point in time. The city's got $280 million in bond money they're trying to get out. So you have all these projects moving, so you're not going to see costs come down. So the projects aren't penciling. So, you know, if you're looking to churn deals, that's where it's going to be tough, because you're going to find out that your internal metrics aren't going to work. If you're looking to hold, if it's a longer term hold, people that are willing to bet on the appreciation of Northwest Arkansas and, you know, be in it for 5 to 7 years, I think there's still going to be some opportunity for that.
Going back to the multifamily asset class and the demand, was it you who I spoke with you, Mark? You were saying like there were some reports coming out that talked about.
There's a couple of real estate companies that put out a couple of reports about, I think it's a timing issue more than anything. A lot of apartments hit at the same time, so our absorption may be a little slower than what we've seen last few years. So it'll be interesting to see if that actually happens. But like Kelly said earlier, as long as there's people moving here like they are, and as long as we can't build houses fast enough, rooftops fast enough, I think that's always gonna be strong. One product that I'm interested in is something that's been a no-no in Northwest Arkansas is condos. But I think the demand in certain locations, I think that's gonna be a product that we'll see for the first time be successful. I'm hoping so, otherwise I'm in trouble. But I think the problem with condos is people try to build them like an apartment and say, oh, they're condos. You can't do that. You gotta build a condo project. And it's a different project than a multi-family apartment project. But I think there's a lot of opportunity for those type of projects, because people want to own, but they want to be downtown. They don't have $1 million. How you solve that problem? So I think that's a product that we may see in the next couple of years that we've tried. You know, different people have tried it before.
There's one downtown
It's not going well.
The one I know of in downtown was successful. The American Flat, so they're behind the Motto Hotel. Yeah, I think there's a new one that was announced on A and 7th or something up in downtown Bentonville. Downtown is a draw, right?
Yeah.
So you can get there. There are some people looking at condos. We've looked at and underwritten a couple of larger condo opportunities. I think one will hit. It probably won't be the size that I've seen. It won't be next year. Just scope, put it all together.
Question,
Brian. So a couple of guys have made some jokes on that. One was a kind of joke on the banks. The other one was that, hey, we had to step in. Let me ask you guys, what keeps you guys up at night for 2024 coming into 2025, right? Like there's the, hey, we got good growth. We got stuff in Northwest Arkansas. It's insulated, just like we were in 07, 08. There was bubble in, but it was insulated. What is that? What keeps you up? What would be the thing? It doesn't have to be your bank, but what would keep you up right now from what you're seeing or potential?
growth slowing and unemployment going high. As long as people keep moving in here and unemployment's strong, our position is we're solid. I don't have a problem with anything we have on the books right now or that we've looked at it fully filled. But if those two things happen, if we start seeing a slow in people moving here We see unemployment start creeping up.
Which is a mandate of the Fed, right? Like they're against the, so that would be a concern of yours? Yes, okay.
Good growing employment.
Yeah.
Which, yeah, I mean, they're raising rates, people are gonna have to make decisions, make cuts, and then you'll see unemployment. I still think we have an emerging medical industry in Northwest Arkansas that's gonna insulate us to a degree, right? I don't think, and I'm seeing murmurs, right? You can see people looking at doing medical deals and you're like, why are you all of a sudden looking at doing medical deals? Oh, I bet you were in the right room, right? So you're just putting things together. I think for me, right, it's continued growth in population in Northwest Arkansas. The timing of the multifamily market is spot on. We do have a lot of 18,000 doors under construction in Northwest Arkansas. I think 11,000 of those are in Benton County. And so the timing of those coming online. So we're really watching construction schedules. When are they going to hit? And then we're kind of observing the market because those pro formas have to come to fruition. I guess one of the knocks against Arvest is we're a more conservative bank than we are. And I appreciate that. I've got at least 20 more years on to work. So I don't need to be staying up at night worried about a deal I put together. But, making sure that the owners have the equity and the capital, that if it does slow down and there's an extended hold period, they're not having to liquidate quick and lose out on opportunity, or we're not having to liquidate for them, which is even worse. I think you still have insulation, right? I got a lot of people that have cash on the side. They're looking for opportunities and are constantly coming to my office. I'm like, no, we're not dealing with a lot of foreclosures. I haven't had a single person come in here and tell me they're struggling to get their property rented or leased up, but I'll keep you posted. So we have some buffer, but I think if anything is the timing of the multifamily coming on, and are they going to hit the projections? Because when you're looking at $2 plus a square foot on multifamily, that's a new market for us. It's not unheard of. I mean, you go to some of the bigger markets adjacent to Arkansas, it can be achieved.
I mean, 3.5 because of Howard, right?
Right, yeah. 400 square feet.
Yeah.
This is
You get
a
all
square, but you're not getting,
Nice closet for someone.
So, speaking of kind of the timing of the development, what do you think right now is a conservative occupancy when you do pro forma, especially for development projects? Obviously, it's gonna, depend on the area, et cetera, but there's some experiences in the projects we've seen. Considering the timing.
Yeah, we're not seeing any issue with current projects being leased up in pretty much any market. Large industrial warehouse, we were able to finance that, and I'm talking large 300,000 square feet. If they're gonna try to hold out for a single tenant, that may take a little longer. 30,000 square foot, it's not taking very long to get leased up in the industrial space. Multifamily is still such a high demand. I think our next Skyline report should come out, but the last one in Benton County, Bentonville, was under 3%. It's probably even overstated.
Yeah.
So multifamily is still needed. The timing of that, we did see in the last decade where multifamily had been under 5% in Northwest Arkansas, and it popped to 9% in the following quarter, went back down below 5%. So we could see based on as projects come online. Yeah, so we're not seeing any issue with vacancy right now in our portfolio. We are now asking actual occupancy, not rent roll occupancy, right? You can tell me that Celestial Haynes has 10,000 square feet, but are they using 10,000 square feet? Are they in the office 5 days a week? We are wanting to see that because, again, while we think the office market in Northwest Arkansas is strong, in the other markets, you're seeing tenants that have 24 months left on their lease and there's no one in that building. That's a good sign that they're not going to release that building, at least at the same square footage. And so we haven't really seen any concerns with that here. The main driver for that is Walmart called their people back. And so then Walmart said, hey, vendors, we need your people back. My wife had to go back to the office 3 days a week for the first time in 5 years. Actually, she was never in the office before the pandemic. She's like, wait a minute, this is completely new to me, but you're seeing that. And I think that'll help our office because people are doing it.
How about the new Walmart home office, campus? Will that affect the office?
Yeah, it will. Down J Street, Walmart has a lot of square footage leased on J Street.
I thought we all think that, right? We all think what's going to hit the market when they all move there. But according to the person in charge of that, what she told me was that not everybody can go to the campus, that they'll continue to lease other buildings. Like, even when they get it done, it's not big enough for them from day one almost.
When it's
like
complete,
yeah.
when it's complete, it's going to bring a whole lot more people in that are going to need space.
So apparently there's already teams that can't get on campus. Like there's not room for them. So it's one of those things we all assume there's gonna be a lot of vacancy up and down J and other places, but that's not what they're telling us. And I don't know what that means, but
Again, with the medical, that's gonna really grow.
Yeah, and not a lot of people understand that or really know. I was talking to the director of the whole health school and just where they're at, they're hiring. It's just now beginning. So there's going to be continued people moving in for that. And then the support services, I'm talking to equity groups that are looking to go out and make acquisitions for certain types of medical businesses. aggregate them and bring them back here. And when I asked them, how many people are you talking about, you in Northwest Arkansas, they're talking 500 to 1,000 people. So yeah, I think the medical industry is a sleeper right now. That could be the next round of growth for us.
Have y'all heard of medical mile? Have y'all heard the term? So that's something that's happening. I mean, when UAMS is building a $50 million building in Springdale, you should start paying attention. And you look at Johnson Square, that whole build out, that's all supported by medical, and it'll continue to be so. So I think we're just now starting to scratch some of the things that's going to happen from a medical standpoint.
Children's is expanding.
Children's
$500
expanding.
million expansions, talking to Eric and also, and their hiring strategy and what they need. Again, there's a lot of wind in our sails right now, but there are things that can slow us down, and there'll be a level of insulation. So if the big markets take a big hit, we'll take somewhat of a hit, in my opinion. I think we saw the same thing in 2008.
Question, just on the infrastructure standpoint, if that's coming up at all in conversations about, the revenue to be able to support future growth, whether or not you're seeing that or having these conversations.
Yeah, so I'm a member of Urban Land Institute. It's a group of lots of different professionals. And I make this statement because I mean it. We have about 10 years to figure this thing out and do it right. Otherwise, we're going to be in the next mess. Unfortunately, I think we grow so fast that the cities can't keep up. I mean, you guys know how government works. There's so much red tape that it just takes forever. Our construction loans are so much longer now than they were just 2 years ago, because it takes forever to get through the city and just get things built. If you've developed anything in the last 3 years, you know that yourself. And so when we used to do 18-month, 2-year construction, now that's 3-year minimum to get something built. So I think we'll continue to struggle with that, but that's a great place to be. Wouldn't everybody like to be where we're growing so fast it's hard to keep up? And that's a great place to be. So we'll always have those pain points. Part of my comment about infill, I think one way to solve that is stop going out, making people drive cars, build more roads, build in on the 49 corridor, 71 corridor, build where people already are, where all the stuff already is. ORT could be huge. Ozark Regional Transit could be a huge part of where we can be in 10 years, but there's got to be a lot of thought has to change. And to me, it's like, I remember 15 years ago, 20 years ago, when people first started talking about apartments, and everybody thought about Lindsay apartments. Not that they're bad, but they all thought, or student housing. No, we mean like upscale apartments. And people back then didn't visualize a Howard or even Uptown in Fayetteville. So it took everybody 5 years to understand what apartments could be. They're not just low income houses, just people either transient or young, don't want to have a house, don't want a yard or whatever. So I think we'll have the same thing with infill, public transportation. We all got to get our heads around that to understand that, a project may be built on a bike trail because that's makes the most sense. And then that's also a part of transportation. And we got to figure all that out. And if we do, we're going to be really well off. If we don't, we're going to be just like everybody else that we try not to be like right now.
So on that point, I was at the 150th celebration for Bentonville. One of the mayors was talking about her time as mayor, and she came into office. And at that point in time, the state of Arkansas was actually looking at a moratorium on new construction in Bentonville because it didn't have the infrastructure, sewer and water. I do have a concern about that. I think we need to make sure that our cities are planning for that, and that costs money. And the cities are getting a lot of pressure from the citizen to slow down the growth. You guys don't want that. I don't want that. I don't want that for my kids. And so, advocating appropriately for every development that's coming in. I attended long ago 3-hour planning sessions for the Crystal Flats apartment complex. And that was heavily contested, not in my backyard. And it's a beautiful complex. My kids play soccer across from it. One person stood up and said, how many kids are going to have to die at this roundabout before we believe this is a bad idea? That was burned in my memory. I'm like, where are we? But yes, I mean, leaning on each other, showing up for these projects and telling the city, hey, no, this is the right thing. This is what we want. I think it was a few years ago, I got a call, Southwest East Street in Bentonville. The city council was going to lower the zoning to single family, large lot, medium. It wasn't a big change. It was just one level down. And so they called me like, hey, will you go speak at the city council? Said, absolutely not. I live on Southwest East Street. And I'm trying to have my wife and then my neighbor and my parents go and speak for the downgrade. So we're just going to stay silent over here on our little compound. But to see that, it was a little concerning. I think that's okay. You're getting a lot of city council. I saw someone vote down a multifamily project in front of the community center. They wouldn't rezone that land to be higher density because they were concerned about traffic and But I think it's a great place, right? You have an amenity of a community center, a bike trail's not too far away. So if we need places for people to live and they want to come and live here, they want to be by amenities. They want to be out in western Benton County in between Gravette and Bentonville and have to commute in and miss all the amenities. So I think you're advocating to the cities, the planning commissions, city councils is important so we can all continue to live in a growing and thriving community.
Awesome, I think we're coming up to the end, right now, just looking forward to 2024. A lot of our investors, lenders here, how do you think the deal structures would be to make the deals for example, in 2023, right? A lot of the deals that we did was highly private equity, a lot more private equity than we did in previous years, and the buying, let's say the same thing. So alternative sources, what are you projecting to see 2024 in order to make the deals for all of you guys? If you guys have I think people any kind of asset class that I found that, learnings from one asset class, we will applicable for another. Especially if you find things about it. Like someone finding like people with done all the parts and the parts that you
Yeah, I've started to see more seller financing deal, like we've started to ask, and sellers have started to been a little bit more motivated to do a little bit seller financing, at least a portion. I mean, that's how I got started in 7 years ago with seller finance, when it was a little bit more out of the box, but now it's kind of coming back around because the discrepancy between buyers' expectations and sellers' expectations, sometimes the seller can get closer to their price, the buyer can get some seller financing. So I've started to see, we've done preferred equity. I don't know if you guys are seeing seller financing sort of come back more in the picture.
It's hard to hear.
Yeah.
For the most part, especially on larger investments that may be generational, in particular. A lot of that's estate planning related as well, but no, it's definitely in the market, and that's why I was kind of alluding to earlier how to leverage up on something that's a little bit more small dollar. It's right in a raising interest rate environment, seller financing can be very attractive. That is it your first rodeo? Do you have the trust in your title and attorneys to help you put that together? And what is the partnership structure? What's the end game on that? There's always an opportunity to refinance. That can be a little convoluted down the road, depending on how you structure that. With a lot of money on the sidelines, I think it's a great time for people to reevaluate where they are. The plan is across all industries, manufacturing or industrial real estate in particular. I'd say that it's here. We've seen it for several years. When the return is attractive for them. So, but more back to the question, 2024, what's the market look like? What's the supply? I've been in my career looking at what's the middle of the fairway for Austin, Texas, or Colorado is becoming more commonplace here, guys. It is. So however you want to raise that equity, it's really the financier's position. But the question is, what's the end game? Am I holding this or am I flipping? It's more expensive than what I'm short.
Another question too, if you guys don't, I guess we can start with Matt and Tim, you guys. What are you guys most aggressive about? If something's on your desk, you're like, okay, yeah, I know I can get this approved, like, or what are you guys most conservative about? Is that existing multifamily, or maybe you're more conservative on ground up development or infill? I guess we could maybe go down the line, like what are you guys?
That's a great question.
Most aggressive about for lending, and then what are you guys most conservative about for lending?
I don't know if it's aggressive or conservative. I think it's what makes sense. What pencils, what cash flows. I mean,
So cash flow, so not development.
I mean, yeah, we're definitely, I would say, interested in development.
Yeah.
That's what we'll play.
Mm-hmm.
But in terms of any kind of, ground up construction, investment property, I mean, that's the sort of everybody's having. I mean, it's, returns for you don't make sense when you're having to put 40-50% on the deal. So it's just a rub, but I think, who's to say, but eventually, this year, it's gonna be kind of a slow grind, I feel like, for some of these projects to make more sense, to get some traction, which with the extra inventory, what's out there right now with the family in that space, that might make a little bit of sense right now. Let some of that ease out before new stuff starts. But I think it's a bank, it's, first meeting, especially new market, we want to grow in this market, we want to grow with the market. So we'll look at any deal. It's just right now, as everybody's experiencing on an investment standpoint, there's just a challenge. From an equity standpoint, in terms of what both sides can get comfortable with, what makes sense long term for the project, especially if it's an old deal, so.
Yeah, so I mean, a deal comes across my desk, I really like industrial, I like industrial retail. Especially right now with construction costs being so high, you can build those buildings for relatively cheap. Leases for those buildings are relatively cheap, so it opens up a whole lot more users that you have available to fill those spots. You don't need, well, in most instances, you don't need quite as much cash down as you do for like a multifamily project or like an office development, because those buildings are obviously much nicer and they're also more difficult to build. So as far as just like hot loans right now, especially in this market, like the industrial retail is like close to 98-99% occupied. Kind of view those as slam dunks. And then also, if we're gonna make a loan, and Brian knows this, we really want deposit accounts. So that's huge. If we can get a deposit account with a loan, that's gonna be probably one of the first things that I'm asked before debt coverage ratio and all that is, what's their liquidity like? What can they bring to our bank? So, and then going back to your question, what's keeping me up at night? Net interest margin. Just the vast increase in rates, and we're all fighting over deposits from each other and offering crazy rates than what would have been 2 years ago. It's just kind of a wild west out there. Nobody knows what rates are going to do. So how do you answer a question you don't even know how to answer? So
Our approach, or my approach, is right project, right place. That's kind of what I look for. He was talking about Depot 16, Jake Mill. I mean, obviously we were a big part of that B Street development Jake did. Why? Right project, right place. So we're looking for projects where we are, downtown Bentonville. We're doing projects there. We're expanding to some other downtowns. We're looking for projects there to be really aggressive in those areas. So to me, whether it's industrial flex, industrial retail, multifamily, condos, townhomes, tiny homes, I mean, if it's the right project, the right place, we're interested in it. And I think there's a market for a lot of that in a lot of different places. Not everybody's willing to look at those because they don't have the history, but it's funny. I remember industrial direct space was the hottest thing going in the summer. But now I can't get from my house to Bentonville. I live in Springdale, I work in Bentonville. I drive by 50 projects, industrial. So somebody's gonna get hurt in that market. I don't know who. The last, it's kind of like the moving chairs and when the music stops, somebody's gonna allow the chair to sit in it. So you have to be leery of that. I mean, you got timing is part of it, right? So right project, right place, or I guess right time will be the third part. You gotta hit the time just right. And
I'll say that there's some pretty interesting market conditions that affect that as well. I mean, industrials, especially just white box stuff, is so hot because of our location geographically. We have to understand that it's 6 hours to Dallas and 6 hours to Atlanta. We're right in the middle of all this logistics stuff and the transportation industry that's driving that warehousing, or it's supply that's constraints, supply chain constraints that make people need warehouse space because they had to order in advance. But these things all change. And one thing that you have to keep an eye on is the effects of who your tenant is. What's the labor market with transportation? What's the cost of fuel doing? These things make a big difference. I'll say two things. One, what keeps me up at night is really just wage growth and making sure that people that live here can afford to live here. But that's pretty sentimental. I can't affect any of that. I would echo that medical is a really hot market, and it has been for a long time. This is going to be a place for education and entertainment as the community grows from the center of Fayetteville outward and back into itself. So I wouldn't say I'm looking for tiny homes by any means, just because it's not what my bank does. But I'd say that I would completely agree with your sentiment of right project, right location. It's really about the right operator for me. It's about the right relationship. I don't need all your deposits because I'm well capitalized. I understand why other banks are having market compression because the cost of funds are going up and the cost of insuring FDIC insurance are going up. We've all budgeted that into our next year. So it will be tight, but more particularly here, we are a little bit insulated, guys. And I've been banking here since '08. I've sat in all those committees. I've watched people try and buy everything off of this for pennies on the dollar. I don't have any past dues and I don't have any bad loans that were downgraded last year. Knock on wood. But we're in a good market. It's just about the quality. And from my perspective, it's almost about, like I said, the relationship. You're probably gonna see a lot less appetite for just round, like, this is my first deal I'm trying to do. Because there's an awful lot of questions.
I think we're all good at owner occupied, right? I mean, ABC is a limiting, if you're gonna have an operating business in it, we're all fighting for that triple net credit tenants, we'll all be good aggressive on that. But, you know, Arvest, special use properties, you know, we looked at a swimming training camp and that was just tough for us to get really excited about when you're gonna have a big hole of water in the middle of this building. So we couldn't get it, and I understand they were able to get financing. SBA plays a big role in some of those special use properties. We did a high-end dog daycare this past year. SBA helps out tremendously on the underwriting, the projections of that property.
The marketplace is evolving.
Yeah, it is, and so we there's a lot of demand. To what Stan and Mark said, it's expert owner, operator, location, and project type. And that's really what we're looking at. Back to your point, Stan, yeah, if it's your first deal, just expect it to be a longer conversation. Expect to have more equity. Yeah, it is. I mean, and there's a lot of deals happening up here. And so while, I mean, you got a lot of banks, we still get to pick and choose, and we are looking for strong asset quality going into whatever happens in 24 and 25. So we're at a 60% loan to deposit ratio. I still want all your deposits because it slows everybody else down. And so if you came to me, it's going to be a requirement that you bring deposits, not because necessarily you need them. I just know everybody else needs them. And so my entire team of lenders knows that. And so term sheets always include a deposit standpoint requirement.
And then a couple of you mentioned the 80/20. So what are you think?
What's that?
The 80/20 ratio, like what are you doing?
Well, one of the larger deals, we got all the way down to 55/45, 60/40, 5.
It feels like the new 80s, 70 probably.
Yeah, I mean, I think you could, that's probably what we're seeing is pretty standard. As rates come down a little bit, you're still not gonna see a cost decrease. I don't think you're
Is the
seeing.
SBA able to help to pick that up a little or?
Well, it's depends the type of project it is, right? So investor real estate, they don't do, or at least I haven't seen them do investor real estate. But we've been able to work some owner occupied things. If you have a military background and you're looking to do storage units, we were able to work some deals in that way.
There's also some SOP that's rolled out in 2023 where there's partial ownership. Financing is available through SBA. I've seen a lot of that activity. So that can kind of segue into all assets, opportunities for credit and so on and so forth. But it is very industry specific, is what I would say.
I tell you, if you're looking to put a deal together, I tell people they may have to pay for an education, right? And so bringing in prep equity, bringing in an experienced advisor who can bring cash to the table, your return may be a little less than you were performing early on. But if you're willing to do that, you'll start building your resume and you may find that next go around, the banks are a little bit more generous with their terms. But this is a great market to explore that in because it is such a strong market.
I'm just curious for the group, from a bank draw perspective, for multifamily specifically, from the moment you start the draw to you get CEO and you close out the project, what's the percentage on projects that you guys have that have gone, the developers came back for more money? And what's the percentage on the construction schedule they pitched that it's gone over?
Yeah, we picked up on that real quick, that we
Yeah.
were gonna hit budget some time, and so most of them, I mean, even back to deals we closed in 2021, large multifamily, they're now coming back saying, hey, we're about to wrap up, you think you can give us a little bit more money? And we were like, sure, right? I mean, this is a success, what you're telling us. I mean, you started in 2021 and you're just now asking us for more money.
Yeah.
And so, and the pro forma works, right? We underwrote it in the 2021 rents. Now we're in we're pressing developers and sponsors to say, hey, go get an updated budget, right? If it's not within 3 months, go get an updated one. We're building in the time factor, right? So we're adding in an automatic reasonable extension, 6 months for the construction period, because there's a lot of unknowns and delays. We ran into that. Unfortunately, for a period of time, we had a subdivision finance that had no electrical boxes in it. When I found out about that, I wasn't too happy because you can't do anything. So yeah, the city gave the final plat and everything. I was like, how did we get the final plat? We didn't have the transformers. So now we have a new policy to go out and check and see if we have transformers.
I didn't have any in the market.
There wasn't. That's the problem. And you had like a 50-week delay or something. I don't remember what it was this peak. It's always something. Right?
Build around.
Which goes back to vet your GC very well.
Well, that's what I'm asking. Most PCs are pretty unrealistic with.
Oh, 100%. Yeah, we're pointing it out, and we're telling our developers and we get the privilege to work with a lot of the larger GCs. And so I'm generally posing those questions to them. What do you think from schedule and timeline? And they have no problem sharing that information.
Cool. Well, I think we'll wrap it here. Just want to thank you guys for your time, and also, I think we had some great questions, and on the data points or report commissions, panel reports, I assume almost everyone's familiar with that. Also, there's other virtual real estate use, so like to read CRE daily, some data points on there that's interesting, speak of industrial. I think in construction, industrial slowed down by 50% nationwide. So it's good to keep an eye out, who are what's building. I think the lenders have given really great perspectives tonight. I hope you take away something interesting and new. We're coming up to the time here, but if you guys have time, feel free to stay on the network. Brian, do you have anything else to add?
Yeah, it was great. Appreciate it.
I will say that, thank you again, the sponsor for making it even possible. If anyone's interested in sponsor, definitely talk to Brian about it and letting us know. We do have a Facebook group. I'll go up here in a little bit. If you guys want to join that, we stream live. This is our first time streaming live, so hopefully it worked out okay. And if you face no other questions, we can make it, but we definitely encourage people to network in person. And I'll just pull up the Facebook link here now, along with our next event in February as well. So this is the Facebook group. It's called Northwest Arkansas Commercial Real Estate. You should be able to find it. Brian, my face are on there, so you can't miss it. And also, Brian, can you scoot over for a second? Can see that I'm not used to Apple here. And for our next event, we'll be learning a little bit more on property management, actually, through Elevate's their property management branch as well. Brian, would you like to talk a little more about?
Yeah, so last year we rolled out a property management company as a multifamily owner. One of the biggest aspects is the property management. So we wanted to take full ownership of that. So we rolled out a property management company last year, starting to take over all our properties and some other markets and select markets. We're managing third-party property management. So we have Michael Davalos, and then also not on here is Tessa Frank. They have a lot of experience managing thousands and thousands of units all across the country. So they'll be talking about property management, best practices between owners and property management. Even as a passive investor myself, I'm active investor, but I also passively invest. Even if you're not managing tenants and toilets, it's good to know what goes behind property management, whether you're in the weeds or not. So we think this is another great topic. So this will be Tuesday, February 13th. So second Tuesday, of February.
Well, excited to hear about that. And was something else. And yeah, so thank you again. And we don't have anything else planned. We just want to thank you for coming. And if you have any feedback, feel free to let us know. Our QR code for signing didn't work out so great last night. If you want to stay on our email list, we'll appreciate if you can write your name to the best you can on that piece of paper out there, and it's harder to read handwriting sometimes. So we can keep you updated on future events. We also like feedback from you, what you would like to see. This is our second year running it. We started September 2021. Some of the other speakers we'll have in mind is, some of the operators in maybe affordable housing. It's a huge topic in our area. If you want to make any introductions to those, we're welcome to. We also are looking at maybe some type of conversations with. We're also on the agenda to speak with Mervin with the Skyline reports, kind of more in the detail, more on the real estate side of things. So if you have any connections, we're here to expand the network. We both have very good growth mindset. We want to, bring the word to Northwest Arkansas. So without further ado, thank you again, and thank you the speakers, all of you spending the time here. Really appreciate it.